Good morning, and today I am doing a book review on one of my own books, and the book is called 10-Minute Shares, Simple Strategies for Making Money on the Share Market. As a wealth coach, I frequently get comments from clients about how they want to invest in the share market, but they're absolutely petrified of doing so. So I've developed some very simple strategies that I've brought together to get people investing in the share market at a much lower risk than what would be traditionally investing on day-to-day or trading. And some of the things we look at are not to do with shares, but actually the systems around shares that when you do invest in the shares will absolutely enhance what you're trying to do in the share market. Now, the very first thing is compounding interest. It was Einstein who said that compounding interest is the eighth wonder of the world. If you can understand the concept of the compounding effect and how extremely powerful compounding can be, then you will see that if you can apply that to shares and buy shares on a regular basis, which are giving you a regular dividend, and you're compounding that back into the same shares, then after a certain period of time, the growth will absolutely explode. And I did a couple of exercises on investing in a specific British share, compounding it and starting off with a deposit of 2,000, starting off with a deposit of 3,000, but also starting off with no deposit and just putting 100 a month aside. Within 15 years, and it was only a matter of months between each of those three strategies, using a specific return, reinvesting the dividend, or using the compounding effect, people became millionaires within 15 years. So it doesn't matter what you want to start with. It doesn't matter how much money you've got, as long as you do something every month. And for some of our clients, we start with just £100 a month. Other clients, we will start with a higher return. But the key is making a start. So the other thing we use, especially in the UK, now in other countries, you probably haven't got this available to you, but a self-investing ISA. Because in the UK, an ISA is an individual savings account, and what an ISA does is anything that comes under the wrapper of an ISA, you don't pay tax on the profits that you make within it. So to get the maximum benefit and the maximum compounding return on share investing, then if we do the investing through an ISA, you will get much quicker returns on your investment. So let's talk about shares. Now, many people, when you talk about shares, they think about the FTSE 100. And until you're an experienced investor, my recommendation is stay out of it. Due to legislation in the UK, pension schemes invest in FTSE 100 companies, and they are looking for very small movements within share price to make their profit. So the share price does this every day. The share price will go like this. Right? Think of the sea, extremely rough seas. That's what FTSE 100 is like. What we want is we want shares that are trickling along fairly stable in price. And that's why we invest in 250 and 350 companies. We're looking for companies that are stable, They give us a regular dividend, and as a regular dividend, we're looking at monthly or 3 quarterly shares. We are wanting companies that are very stable in price, and we invest at a certain price depending on how much money you have to invest. And that's where this book comes in. It goes through those strategies of picking the right shares, finding the right markets, and analysing the shares. So some of the other things that we would look at and some of the strategies we'd use is a strategy called PCA. Now, PCA is simply called price cost averaging. So if you are buying a share and it's at this price, and you can then buy it at this price, your average cost comes here. And during the day, share price goes up and down. During the month, share price goes up and down. So if we have a set time each month that we go in and we invest the same amount of money every month, we will always be buying the shares at a slightly different price, and that will average out at a certain price over a period of 12 to 18 months. And regardless of the share, as long as it is a stable company, then you will make a capital gain on the shares. Because if the price is doing this and you're buying some high and some low, you will bring your average price down, which will give you a capital growth. Now, the other benefit of using the strategy that we use is dividend investing, because initially what we do is we reinvest the dividend back in, and a lot of the shares we use are monthly dividend. So for example, one of my favorite shares that I invest in, it has an annual return, a yield we call it, so it has a yield of around about 7.7% a year. Now, when you reinvest your dividend every month, that takes the yield up to around 8.2%. So by repeating the process every month, you generate a higher return on your dividend, on your capital that you've put in. The book 10-Minute Shares, it looks at charts. So I take you through some of the different types of charts that are available. We look at line charts, we look at area charts. So line charts are the end of day close price. We look at area charts, which give us some comparisons between what's been sold and volume. We look at candlestick charts, which will show us what the share price is within what it's traded in within a day. There's OHLC charts, which is the opening price, the high price, the low price, and the close prices. OHLC. And then we actually have some tools that we are able to overlay onto charts to give us more information about where we think the price of the share is going. And so in this book, 10-Minute Shares, the overlay tools that we look at are what's called moving averages and RSI. So a moving average is simply taking the price of a share over a set period of time. So if, for example, we did 30 days and we did 30 days today, the moving average would be calculated back over the last 30 days. Tomorrow it would go back over the last 30 days and drop the one that we had on the previous day off. So it recalculates what the average is every 30 days. That's if we use a moving average of 30. You can set the moving average at different time frames to suit the type of information you're looking for. And with moving averages, we can get a lot of information of the shares, which shows where we think the price of the share is going to go and when we think the best time to buy that share is. Okay. So I cover a little bit about moving averages in the book. And the other thing that is in the book is called RSI, so it's a resistance and support indicator. And resistance and support indicators give us an idea of the stability of a price and what we think the price is going to do. So we use two lines. I'll put my face in between two lines. And what we do is the support is the bottom, right? So imagine jumping on the floor, right? That is the support. So what we're saying is, because prices move, do we think it's going to drop below a certain level? The resistance is how high do we think the price is going to go? And an analogy is the ceiling. Do we think it's going to reach the ceiling and go higher, or do we think it's going to hit the ceiling and come back down? And these overlay tools using the moving averages and the RSI index help us to decide what we think the share price is going to do. So there's different types of strategies within this book. I'll show you this again, which is 10-minute shares, simple strategies for making money on the share market. The book is available through Amazon, and I will put the link below. And as I said, it is very simple strategies to get you started on the share market. You can invest for very little money, make money on the share market, and if you invest long enough, become extremely wealthy from it. So please, buy the book, 10-minute shares, simple strategies for making money on the share market.